Starting with the gold prices, which have edged up on the back of weak rupee and trailing gains in the world markets. But demand remains sluggish as the gold buying season in India ended and a lean season has started here. The international gold prices were boosted in the meanwhile by demand from China after prices declined in the earlier session. But the outflows from ETFs have capped gains. The global gold ETF holdings have dropped for a fifth month in the month of May. On your screens, though, we have seen some gains coming in, $12 off again in the European markets at this point. The Indian markets, of course, holding firm because of the decline in the rupee. The crude prices then retreated in trade today as traders booked profits ahead of the key inventory data coming in from US. It's predicted that the US weekly inventories may show some decline. The NYMEX weekly hit a high early in the trade, but dealers seem to be taking some risk off the table before the US inventory numbers trickle in today in the evening. Joining us on the show then is Vijay Bambani, who's author and CEO of BSPLindia.com. Also joining us is Mr. N.S. Ramaswamy. He's head commodities venturer and he joins us live as well. Mr. Ramaswamy, hi, let's start with you first. And what's your sense now coming in for the precious metals? We have been very choppy, but in that range, 1400 still holding as a resistance, at least on closing basis.
There is some stabilization expected, Manisha, in gold, especially in the bullion pack, including silver, I would say. The stabilization where I see some rebound that could be expected. Basically, if we were to see the regional way, the impact on the fundamental, like if we were to talk of the PMI numbers of the Eurozone, which has seen a good contraction, but the trend is clearly an improving one. Rather, we could say that there is nothing bad than the current scenario which could be seen. So some improving trend is seen from there, which could probably take euro currency as compared to dollar a bit of strengthening from the present levels of 1.29 levels as compared to the dollar index. So we could see some pressure on dollar going forward, although we expect GDP numbers of US to come up tomorrow. So we are expecting today's range as well as tomorrow in the bullion pack. Gold should be hovering in the range of close to 1405 level in the COMEX, or in the rupee terms we expect levels of close to 26,700 and odd. And silver, similarly, we are expecting levels of close to 43,950, or it could go a shade above 44,000 to 44,100.
Vijay, what's your sense coming in for the precious metals now for the very near term as we look at the data and the movement coming in for currency as well? The next 24 hours, how would you range it?
Manisha, apart from technical factors, I don't think there's anything significantly positive that currencies can look forward to. Silver will face resistance at 44,000, which is not only a round figure psychological mark, but also a congestion point. Unless silver goes above 44,000 and closes above this convincingly on high volumes and open interest expansion, I don't see silver gaining significantly. Where gold is concerned, 26,750 or 26,800 odd levels will act as a resistance on the upside. We are staring at expiry in the prompt month gold series. So the primary consideration for any movement will be rollover of positions, both long and short. And apart from those considerations, I don't see too much by way of a very large move on an intraday basis either today or tomorrow.
Let's also get a view going from then Avan Hagati. He's G Resources Group Executive Vice Chairman and he joins us on a phone line from Melbourne. Avan, hi, welcome to the show. There are various reports on the possibility of gold prices sliding to $1,300 an ounce and below that as well. What's your own view on the prices?
Manisha, the one thing we can say about gold prices going forward is that they're going to be volatile. Yes, they've come off $300 or $400 in the past few months. There's stop-loss selling, there's program selling, there's ETF unwinding, and there's people thinking that maybe the US economy is getting better and therefore there's less uncertainty in the world and so on. But on the other hand, you've still got volatility in currencies, you've still got volatility in markets, and there's still uncertainty and some of the fear factor index out there, Manisha. So you've still got that sort of volatility. It wouldn't surprise me if it dropped below there, but I think the longer term trend, in my view, is clearly on the upside. I think we've seen a dip. And I think we'll see it more positively going out the next 6, 12 months, 2 years.
Fair point, Owen. Also, how do you look at the latest IMF report that shows central bank buying holding consistently? How do you read that trend?
Look, the buying trend by the central banks has been positive now for a year or two or three. You've got purchase from India, Sri Lanka, Kazakhstan, Russia, Brazil, Mexico, China, a lot of the developing countries continuing to buy gold on the dips, and you're seeing it happen right now. That is a very positive thing, particularly bearing in mind over the past 10 years or so, since about 2000, most of the supply has been coming from the central banks. In other words, the central banks have been selling into the market and providing what the mines couldn't supply. The mines have been supplying a flat amount of gold basically for the past 10 or 12 years, and the central banks have been selling into it. Now the central banks are buying it, and they're certainly not selling it, they're buying it, and so that's a very positive physical trend. You'll certainly see plenty and hear plenty of rumours from time to time about Cyprus selling its gold, about Italy selling its gold, and that's also having an impact, a sort of a negative impact, if you like, on the price, but there's not as if they've got that much left to sell, Manisha.
And between gold and silver then, where do you see value buying for months and years to come?
I take a very clear view here, and that is that you can never ever have enough gold. It is the perfect metal, it's a commodity, a currency, a store of value, all of those things. So you should always have gold in your portfolio, whether you're a country or an individual, if you like. So gold is always good to have, despite the fact that it's come off a little bit. Silver, of course, will track gold. It's it's the second best precious metals to hold, if you like, but it also has a stronger, not only jewellery and ornamental sort of demand, but it also has industrial demand in terms of photography, electronics, and so on. So silver's always good to have, perhaps as a second, and it tends to track gold. But look, Manisha, there's nothing as good as gold.
Fair point, Avan. Then, as you mentioned about that point on portfolios, how much of a portfolio should one have in bullion in case of an individual holding?
Well, I would always look to a minimum of 10%, and a lot of the funds will either hold 10% of gold or gold equities, if you like, up to 10%. In some cases, that might be a bit high. But in terms of individual portfolios, if you like, a lot of interest from people, and you will see a lot of this commentary around the world now, a lot of people, individuals looking to simply buy gold on the basis that it is that safe haven. You will see an uptick in the price, and it is very high security in a difficult world, I suppose, with uncertainty and volatility out there.
All right, Avanagati, we'll let you go at that. Thank you so much for joining us. So gold continues to be a top pick there from G Resources Group. Coming back to you, Mr. Ramaswamy, how would you look at the energy space coming in today? Because we have the US inventory data coming in. The OPEC meeting also is before this weekend. How are you reading into Qs?
In fact, that's bearish trend has set in. Like there is that the lingering impact of the Chinese factory activity or US manufacturing, although growing but at a very slow pace. So probably there could be some pressure building up on crude, and we could expect levels of close to around $92.5 going forward. On a very intraday perspective, we could see the WTI even coming down to close to 94, 93.5 on an intraday perspective. In domestic terms, with a stop loss of 5285, although we recommended a buy, but we expect close to around 5380 levels could be a very good levels to be actually going short on crude.
Vijay, how would you look at the natural gas prices? Because slight bit of a gain coming in for that yet again today. Do you think we are looking at more highs there?
Manisha, natural gas is also likely to have fairly calibrated upsides because the 240 threshold is a fairly stiff resistance, give or take a rupee or two for emotional turbulence. I think the bulls will have to have a very high degree of buying conviction to take it past 240, make it close above that, show higher volumes and open interest expansion for the next leg of the upthrust, if at all it is to commence right now. I think it's a little premature. I think close to 240 or 242 there will be selling pressure and therefore a small blip down on this counter.
To the base metal space then, and we saw good performance coming in from lead in last 24 hours, Mr. Ramaswamy. How would you look at the prices there, and which metal are you working with today?
Lead, if you were to specifically see, we could expect targets of close to 120, 121. With a 118 stop loss, I think one could remain long, but I would prefer to go long on copper with the levels of close to around 415 expected, with a 407 as a stop loss. It's a win-win situation, whereas the stop loss, the risk reward is also beneficial, and I think 422 could be the major trend setter where the correct bullishness could set in. But because of the consumer confidence and the data of the home sales or the housing sector from US, that's got some fillip. Basically, the Chinese economy is what is troublesome for the base metals right now. However, copper looks to be in this range. Anywhere up to 407 could be a good stop loss. One could remain long.
Vijay, on one side it's positive US data, on the other side it's a strong dollar and perhaps the Chinese consumption concerns as well. How would you look at the base metal sector in that light?
Manisha, there are two considerations to keep in mind here. Number one, the rupee is weakening vis-a-vis the US dollar, and therefore any kind of an upside in the international markets on ferrous and non-ferrous metals is likely to have a slightly exaggerated upthrust here because of landed cost considerations. And secondly, when you're looking at expiry, prices do tend to be buoyant, so that long positions can be rolled over. It's more of a enticement come cost of carry which is getting built into the prices. So in the absolute near term, say 1 or 2 trading sessions, barring any unforeseen circumstances like negative news, I would expect the recent upthrust to get built into. Aluminium could actually go past the 103 levels, nickel could go past the 840 levels, lead could test the 120 levels, and zinc also can see some more upsides to maybe 104.5.